Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so look, the blue line there, the 9-day, it's support. Weekly pivot, support. So look, I'm going to sing the same song. I'm like the guy that only knows one song. Here's my song. Until the bears can convert a level that matters and turn it into resistance, those areas will continue to be bought. We will continue to head higher. We will continue to make new all-time highs. So where was their chance yesterday? Let's look at the hourly chart. Right there, 9-day, which was about 58.59 yesterday. Weekly pivot, 57.5. And what do these knuckleheads do? These knuckleheads make matching lows at 55.25. I mean, it was great. Got me out of a short, got me into a long, all that stuff. And we hit higher for the majority of the day. So for a short week, it was a great trading day. Did about 33 for the room. And that puts us over our weekly goal with 3 days to go. So last night we've been long in a couple of different ways against 74. We tried a short, didn't pay. And as we head into the open here in about 15 minutes, we're trying to make new Globex highs. The gap fill is 88. That's what's next. Unless the bears find their car keys, and the first place for them to start looking for them would be below the hourly midband. Okay, you got the hourly midband 76.63. Volume weighted average price VWAP 77.75. Our proprietary moving average is 78.25. You got the 5-minute midband 79.38. So 76.60 to 79.40 basically. That's a chunk of price that the bears are going to have to win. And if they can't, then they're going to lay down. They're going to take out 88, and 92.5 is next. Because that's what we do. So here's your choices. Here's your choices if you're not in the room doing what we do every day. You have to make a conscious decision that you're not going to fight this thing, and you're not going to sell every high, because that tends to not work. You can be long. You can stand aside if you're just one of these perma shorts that just can't bring themselves to ever short them or to buy the market. If you just can never bring yourself to buy the market because this is that and it's this and it's all this other bullshit that people come up with, then stand aside. Okay? There are moments to get short. We had a nice short going. Then they screwed it up. The key is you got to recognize when they're screwing up, when they're losing key areas after making matching lows, and you got to get on the long train. But if you just can't get yourself on the long train, then get the hell out of the way. Don't stand on the tracks. So we'll see what happens here. We open in about 15 minutes. We're long in 76 area, and we'll see what they have in store. We've got our risk out, so what we try to do in the room is just get a free look. We got a free look to see if they can take that 88 to 92 out. And as long as 78 to 76 half holds up through the open, chances are that's what's going to happen. If it starts putting in lower highs, if it gives us a reason to short, we'll do that. But, you have to expect what the market's been doing to just keep on doing it. These dips continue to be bought. And, you can't say it's parabolic. It's not overbought. It's not this. It's not that. What you have here is you got range-bound price. Couple of lows, high, and we're in the range. That's not, that's a technical term. But that's not, we look like Tesla. We're a freaking rocket ship to the moon. I'm not touching that. That's not what's going on here in the indexes. All right. Have a great day. More stuff out on social. Get in the room. Let us help you. Take care. Trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.